Many of life's failures are people who did not realize how close they were to success when they gave up. Thomas Edison. My friends, stick with this. You can do this. 10 to 15 minutes a day is all we ask. You don't have to spin your wheels. You just need to practice trade, take all the trainings, do the work, read the book. We have an autographed copy waiting for you. Just follow the link in the show notes. And of course, subscribe for free so you get all the special daily trainings. The training today coming out to you using all the charts all the time. It explains the simple rules we use for using the weekly, the 2-day, and the half-day chart, how to use weekly vertical crossover, 2-day recrosses. All the basic stuff is in this great training. And if you're a subscriber, it's coming in your show notes today. We send you 1 email a day, 5 days a week. That list is never spammed, is never sold. Let's jump into these charts. We see everything up for the day. That is stocks, bonds, and gold. Let's talk about what we see on these charts. This week is ending up being an up week, a strong up week for the S&P 500. Not crossing over, but getting closer by the day to a potential crossover going up on the weekly chart. Derivative oscillator, which was heading down, is about flat, maybe losing a little bit of momentum. Price percent oscillator is still negative, but getting close, heading up. We'll see what Friday shows us. We do have a green up candle. Of course, broke through at the beginning of the week, the downtrend line. What's going on that 2-day chart? It's not crossed over. It's actually just about as far away from crossing over as the weekly is. We'll keep an eye on that. Derivative oscillator losing momentum, price percent oscillator heading up. And of course, the prior 2-day candle ended on Tuesday. This one represents Wednesday and Thursday, and it is a big green up candle. Of course, we pierced back on the prior 2-day candle. We pierced the weekly trend line. We look at the half-day chart. It's continuing to move up after, for about a day and a half, it slid sideways. That was Tuesday morning, afternoon, and Wednesday morning, and then Wednesday afternoon and Thursday heading up, price percent oscillator heading up, derivative oscillator heading up. That's where we are on the S&P. So we may very well have a failure of that weekly vertical crossover. That'd be the first time this year that the S&P has failed us. Hasn't happened yet, but we'll continue to watch. We would call it a failure if indeed that 2-day crosses over going up. If and when that occurs, that of course would be the end of the potential down move there. Who knows? We might have, depends on what, again, goes on Friday. 2-day could hold on for the week. You might have them both cross over going up this next Friday, or who knows? Might have a hard week this next week. We'll watch. We will see. That's where we are on the S&P 500. Now let's look at the Qs, which is the Nasdaq 100, the tech stocks. We can see the price percent oscillator not heading up. It's actually heading down a little bit. Derivative oscillator is about flat, maybe going down a little bit. And we can see why this is occurring. The up move we see on this latest candle is not topping out on the upper wick higher than the prior. Sound like I'm using a lot of rhyming here today. Not trying to do that. We did see a penetration of the weekly trend line back on the weekly trend breaking this last week. So again, just not moving up higher as far as the 2 weekly charts go. Make sure I make that clear, not 2-day, but weekly. We look at the 2-day. This again is where we see how things topped out at a high of 282.88 back on the 2-day candle ending on Friday. That was the 1st and the 2nd of October, Thursday and Friday. Again, the high there, 282.88, 282.47. So we've not hit that high yet. As far as the first day of this latest candle, price percent oscillator on the 2-day chart is heading up, still negative barely. So is the derivative oscillator. So we'll continue to watch, see what there is to see there. We look at the half-day chart. Looked like we thought we might have a crossover going down back on Tuesday at the end of the day. Maybe Wednesday and Thursday would be down where they weren't. They moved up. And again, up in the morning, rolling back a little bit in the afternoon on Thursday. Price percent oscillator still positive on the half-day chart. At the end of the day, it went from red to green from morning to afternoon. So we'll continue. That's as far as the derivative oscillator goes. So we'll continue to watch the cues. The Nasdaq 100 still has more downward momentum at this point than the S&P 500. So we'll keep our powder dry, see how these things are going to settle out, see how this week ends for us. But remember, the 2-day candle that we're going to be looking at will not finish drawing on Friday. That'll just be the start of the latest 2-day candle on our charts. It will end on Monday. So let's look at what's going on bonds on the weekly chart. Down week overall, big red down candle, up for the day 0.54%. But we see the derivative oscillator gaining downward momentum, price percent oscillator heading down. 2-day chart, of course, it's still going down. Now the prior, oops, I didn't mean to move that line. I just wanted to check what the prior low was here on the Monday-Tuesday 2-day candle. That low was 158.68, the low 158.86. So we did have a lower low earlier in the week. Derivative oscillator heading down, price percent oscillator heading down. The half-day chart, let's see, and I screwed up the drawing of that a little bit. There we go. Let's see what it's doing. Still negative. Okay, it's still negative. What we've seen happen is things bottomed out, as we talked about back on Tuesday morning, and really have been sliding sideways, maybe a little bit up, but still not touching anywhere near where things had been. So again, bonds are just sort of sliding along, I think probably trying to figure out which way this market is going to go. So we'll continue to watch, see what there is to learn here, pay attention, follow this closely, and again, we'll let these charts lead us. Now, and again, you know, you're looking at this and things are in flux. The market's trying to figure out what the market's going to do. What about gold? Well, gold, again, check it out. Lots of questions here. We've got pretty much a doji so far this week. Price percent oscillator still going down. Derivative oscillator gaining downward momentum. When you talk about a doji, it means lots of indecision. That's what that cross means for us on a weekly candle. Well, on any chart, but particularly on the weekly. 2-day, we can again see that sideways slide. This latest 2-day candle is, of course, a down candle. It's a small red candle, little wick on top, longer wick on the bottom. It's indecision tending down, price percent oscillator heading down, derivative oscillator losing downward momentum. So again, weekly on gold is still heading down. 2-day is still heading down. What about the half day? Half day sort of laminated. You can see where gold sort of it just trudged down and ended its down move on Wednesday. And then on Thursday, popped up a little bit. Popped up a little, slowed the down movement, we'll put it that way, on Wednesday afternoon, and then popped up in the morning and looked like it burned off a little bit in the afternoon, still ended up 0.37%. We have a laminated. Look at that. Gold just doesn't want to commit, does it? It just doesn't want to cross over and head back down. So we'll watch. If you see gold starting to plunge, of course, keep in mind you're still negative on your 2-day and your weekly. So if that half-day chart does rotate over, hammering down hard, again, not my favorite chart to use, but might give you the potential for a jumping in point on a trade heading back down on gold. Or maybe gold's gone down as far as it's going to go. We'll continue to watch. Let these charts lead us. My friends, thanks so much for joining us. You need a copy of our book, follow the link in the show notes. Patreon support is always appreciated. Lots of great training. You want to know what options are all about for our Patreon members at any level. We have that 3-part series, the best you're going to get, we believe. Options Made Simple, The Charting Wealth Way, 3 parts. You will love it. Thanks again, Patreon members. Thank you, friends. God bless. All the best from the whole team at Charting Wealth World Headquarters.